The Book Essence Podcast, Episode 18, Digital Gold, Part 1.
Hey everyone, and welcome back. Today we're going deep on the origin story of Bitcoin. And to do that, we're going to be pulling from Nathaniel Popper's book, Digital Gold. I'm so excited to really dig into this with you. I think this is going to be really good.
Yeah, I think this is a fascinating story. It's a story of a mysterious creator, passionate early adopters, and even a dark web marketplace. It's going to be good.
Yeah, so how did we get here? How did this thing go from a cypherpunk dream to like a global phenomenon? You ready?
I'm ready. Let's dive in.
Okay, so first, before Bitcoin,
Yeah.
let's set the stage. So these cypherpunks, right?
Mhm.
These guys were way ahead of their time.
Oh, absolutely. Popper does a really great job of painting this picture of this movement. These were people who deeply believed in using cryptography to empower individuals and to protect privacy, specifically from government overreach. Like, you could consider them digital freedom fighters, but armed with code instead of weapons.
So they were basically coding for like a more free and private internet. Like, what were they trying to achieve specifically?
Well, they had this vision of a world where individuals could transact freely and anonymously without relying on these traditional financial institutions that we're all used to. And they saw cryptography as the key to unlocking this vision. One of their big goals was to create digital cash, a form of money that existed purely in the digital realm and was free from government control.
Right. Yeah, that's a pretty radical idea for the time, especially considering how much we rely on like banks and governments for our financial system.
Oh, yeah, for sure. It was definitely a challenge to the status quo.
Yeah.
Popper highlights some early attempts at digital cash, like DigiCash and BitGold. Fascinating projects, but ultimately flawed.
Why? Why didn't they work out?
The biggest hurdle was something called the double spending problem. Imagine you have a digital file, like a music track. You can copy it easily and share it with multiple people.
Right.
Well, with digital cash, the challenge is, how do you prevent someone from copying a digital coin and spending it multiple times? It's like photocopying a dollar bill. If it were that easy, the whole monetary system would collapse.
So you need a way to make sure that each digital coin is unique and can only be spent once. Like, how do they try to solve that?
There were some clever attempts. David Chaum's DigiCash, for example, relied on a central authority to verify transactions and prevent double spending. But this approach kind of contradicted the cypherpunk ideal of decentralization because you were still relying on a trusted third party.
Right. So it wasn't truly free from control if you still had to trust some central authority.
Mhm.
Okay, what about BitGold? That sounds awfully close to Bitcoin.
It does, doesn't it? Nick Szabo, the mind behind BitGold, came up with a system that was actually quite similar to Bitcoin in some ways. He proposed using computational work to create a digital asset with inherent value. But even BitGold couldn't quite solve the double spending problem in a fully decentralized way.
So close yet so far. It sounds like the cypherpunks, they had the vision, but they were missing that, like, one crucial piece of the puzzle.
Exactly, and this is where the story takes a fascinating turn. In 2008, out of nowhere, this mysterious figure named Satoshi Nakamoto publishes a white paper outlining a new digital currency, Bitcoin.
Hold on. Mysterious? You mean we still don't know who Satoshi is?
Nope! And that's part of what makes this whole story so captivating. Was it a brilliant individual? A group working in secret? To this day, the true identity of Satoshi Nakamoto remains a mystery.
Okay, back to the white paper. What was so revolutionary about it? How did Satoshi crack the code that had stumped so many others?
Well, Satoshi brilliantly combined these existing cryptographic ideas like proof of work and public key cryptography. But the real game changer was something called the blockchain.
Okay, blockchain. Break down the blockchain for me. It's one of those terms that gets thrown around a lot, but I'm not sure I fully grasp it.
Imagine a giant public ledger that records every single Bitcoin transaction ever made. But here's the key. This ledger isn't stored in one central location. It's distributed across this vast network of computers, all constantly verifying and updating the ledger.
So it's like a giant, constantly growing spreadsheet, but spread out across the entire internet. It seems pretty hard to tamper with.
Exactly. And here's where it gets really clever. Each block of transactions in this chain is cryptographically linked to the previous block, creating this immutable record. Think of it like a chain of digital fingerprints, each one impossible to forge or alter.
Okay, that makes sense. But how does that solve the double spending problem?
Because every transaction is publicly recorded on this tamper-proof blockchain, it becomes virtually impossible to spend the same Bitcoin twice. The network can instantly see if you've already spent a particular Bitcoin, preventing any funny business.
Wow, that's pretty ingenious.
Yeah.
So Satoshi basically created a system that could operate without needing a central authority to verify transactions or prevent fraud.
Precisely. And this was a radical departure from traditional financial systems, which rely heavily on trust in central institutions.
So we've got this revolutionary technology. But who were the first people to actually start using it?
Well, as you might imagine, the early days of Bitcoin were pretty niche. We're talking a small group of programmers, cypherpunks, and tech enthusiasts who were drawn to the radical potential of this decentralized digital currency.
So it was like a small underground movement at first.
Absolutely. One of the earliest adopters was Hal Finney, a renowned cryptographer and cypherpunk. He was actually the recipient of the first ever Bitcoin transaction. Satoshi himself sent him 10 Bitcoins just to test the system.
10 Bitcoins back then? I'm guessing those would be worth a fortune now.
You can say that again. But what's really fascinating is that these early adopters weren't necessarily driven by profit. Many of them were motivated by ideology, by the belief that they were participating in something truly groundbreaking.
It's like they were pioneers,
Yeah.
venturing into this uncharted territory, driven by the thrill of the unknown.
Exactly. And their stories highlight this crucial aspect of Bitcoin's early days. The value of Bitcoin wasn't immediately apparent. People were mining thousands of these digital coins, but no one really knew what they were worth or how they would be used in the real world.
So how did Bitcoin go from being this obscure digital curiosity to something that people could actually use to buy and sell things?
That brings us to a pivotal moment in Bitcoin's history, its unexpected journey into the depths of the dark web. It turns out even a revolutionary technology needs a market to thrive. And Bitcoin found its first market in a rather controversial place.
Okay, now I'm really intrigued. Let's talk about how Bitcoin found its first real-world use case, even if it was in a less than legal setting.
So you can imagine a currency that allows for anonymity and operates outside the traditional financial system. Well, it caught the attention of some unconventional folks.
Okay, let's talk about Silk Road. This is a dark web marketplace, right?
That's right. In 2011, Ross Ulbricht, a young libertarian idealist, created Silk Road as a platform for buying and selling anything, no matter how illicit. And Bitcoin became the perfect currency for this underground marketplace, allowing buyers and sellers to transact anonymously and avoid government scrutiny.
So Bitcoin's first major use case was facilitating transactions in like a black market. That must have been pretty controversial.
Oh, it was a double-edged sword. On one hand, it brought this surge of attention and users to Bitcoin, driving up its value. For the first time, there was this real-world demand for this digital currency. But on the other hand, it also kind of painted Bitcoin in this negative light, associating it with illegal activities in the minds of many.
It sounds like a classic case of technology being used for both good and bad purposes. So did the emergence of Silk Road change the dynamics within the Bitcoin community at all?
Absolutely. It intensified this already simmering debate about regulation. You had the cypherpunk purists, those who championed Bitcoin as a tool for freedom and anonymity. They were generally unfazed by its use on Silk Road. They argued that Bitcoin was simply a tool and its use was up to individuals.
So they believed in the technology itself.
Yeah.
And didn't want to try to control how people used it.
Exactly. But others, especially those who saw the potential for Bitcoin to become a mainstream financial tool, they were concerned that its association with illegal activities would hinder its adoption. They argued that some level of regulation would be necessary to gain legitimacy and attract wider use.
All right, that makes sense. If you want something to be accepted by the masses, it can't have this shady reputation. So how did this debate play out?
Well, it was a pretty heated and often acrimonious discussion. Remember, the Bitcoin community was still relatively small at this point, so these debates were happening online, in forums and chat rooms where things could get pretty intense.
I can imagine. These were people who were deeply passionate about Bitcoin and its future. So you had the purists on one side arguing for complete decentralization and freedom, and then others pushing for some kind of regulation to make Bitcoin more palatable to the mainstream. What happened next?
Well, as Bitcoin's popularity grew, it inevitably attracted the attention of governments and regulators. The U.S. government, in particular, started investigating Bitcoin's use on Silk Road, concerned about its potential for money laundering and tax evasion.
That seems like a natural progression. Any new technology that disrupts the status quo is bound to draw scrutiny from those in power.
Exactly. And this marked a turning point in Bitcoin's journey. The question was no longer whether Bitcoin would be regulated, but how it would be regulated.
Okay, before we dive into the whole regulation debate, I want to go back to something you mentioned earlier, the rise of early Bitcoin exchanges like Mt. Gox. You said there was some drama there.
Oh, yes, quite a lot of drama. You see, as Bitcoin's value started to surge, driven in part by its use on Silk Road, people needed a way to buy and sell it easily. This is where exchanges like Mt. Gox came in.
So it was like the early days of the stock market, but for this brand new digital asset that no one really understood.
That's a great analogy. Mt. Gox, which ironically started as a site for trading magic, the gathering cards, became the world's largest Bitcoin exchange. But as its trading volume exploded, it became clear that they weren't prepared for the challenges of handling such a valuable and volatile asset.
What kind of challenges are we talking about?
Well, for starters, security. As the saying goes, where there's money, there are hackers.
Yep.
And Mt. Gox, despite holding this massive amount of Bitcoin, had some serious security flaws.
So they became a target for cyber attacks.
Absolutely. And in 2014, disaster struck. Mt. Gox experienced this massive hack, losing hundreds of thousands of Bitcoins. It was a catastrophic event that sent shockwaves through the entire Bitcoin community.
Wow, that must have been a huge blow, not just financially, but also to the perception of Bitcoin as a secure and reliable system.
It was a major setback. People lost their savings, trust in Bitcoin was shaken, and the price plummeted. It highlighted the vulnerabilities of this nascent industry and the critical need for robust security practices.
It's a reminder that even the most groundbreaking technologies are susceptible to human error and the ever-present threat of malicious actors. So how did the Bitcoin community recover from the Mt. Gox collapse?
Well, it wasn't easy. It was a painful lesson learned. But as they say, what doesn't kill you makes you stronger. The Mt. Gox debacle forced the Bitcoin community to confront some hard truths about security, regulation, and the need for greater transparency.
So it was like a wake-up call.
Yeah.
A moment of reckoning.
Exactly. It separated the serious players from the fly-by-night operators. New exchanges emerged with a greater emphasis on security and compliance, and developers started working on improving the underlying technology to make it more robust and resilient.
So in a way, the Mt. Gox collapse, while devastating at the time, actually helped push the Bitcoin ecosystem toward greater maturity and stability.
That's a great way to put it. It was a painful but necessary step in Bitcoin's evolution. And while the debate between regulation and decentralization continued, it was clear that the landscape had shifted. Bitcoin was no longer just a cypherpunk experiment. It was becoming a force to be reckoned with in the world of finance.
So we've got this fascinating interplay of technology, ideology, market forces, and even criminal activity, all shaping the early trajectory of Bitcoin. It's like a real-life thriller unfolding before our eyes.
It is, isn't it? And this is just the beginning. The story of Bitcoin is full of twists and turns. And as we move forward, we'll see how this technology continues to challenge these traditional notions of money, power, and control.
Okay, I'm hooked. Let's continue our deep dive into the evolution of Bitcoin. From its early days of experimentation and controversy to its emergence as a global phenomenon. So we've gone through like Bitcoin's early days, witnessed its growth from this fringe idea to like a global phenomenon. But what does this all mean for like the average person? Should someone who's not like a tech expert or a Wall Street investor even care about the story of Bitcoin?
I think so, yeah. I mean, Bitcoin's journey has profound implications for all of us, even if we never buy or sell a single Bitcoin. It challenges us to rethink these fundamental assumptions about money and finance and the role of technology in our lives.
Okay. I'm intrigued. Let's break down like some of those implications. Like what are the key takeaways from this story that like everyone should understand?
Well, for centuries, we've entrusted these centralized institutions like governments and banks to control our financial systems. Bitcoin offers this alternative, a system that is decentralized, transparent, and resistant to censorship.
So it's a whole new paradigm for money and value.
Precisely. And that shift in thinking can be applied to many areas beyond just finance. I mean, think about how the internet disrupted traditional media and communication. Blockchain technology, the foundation of Bitcoin, has the potential to revolutionize everything from supply chains and voting systems to healthcare and education.
That's a pretty bold statement. Are we really talking about a technological revolution on par with the internet?
The potential is certainly there. We're still in the early stages, and like any new technology, there are challenges and uncertainties, but the possibilities are truly vast. It's not just about the Bitcoin currency itself, but the underlying technology and philosophy of decentralization that it represents.
Okay, so we've got this potentially revolutionary technology, but there are also risks. You mentioned the Gox collapse and this ongoing debate about regulation. Like, what are some other things we should consider as Bitcoin and blockchain technology continue to evolve?
Well, security is a major concern. I mean, Bitcoin is decentralized, so there's no central authority to protect you if something goes wrong. If you lose your Bitcoin wallet or fall victim to a scam, there's no bank to call or government agency to file a complaint with.
So it's like the Wild West of finance in some ways. You're responsible for your own security and have to be extra vigilant?
Exactly. As with any valuable asset, there are bad actors out there trying to steal it. We've seen hacks and scams and all sorts of nefarious activities in the cryptocurrency space.
That's a bit unsettling. So how can people protect themselves?
Well, it all comes down to education and awareness. Do your research, understand the risks, and take appropriate precautions. Use reputable exchanges and wallets. Be wary of get-rich-quick schemes, and never invest more than you can afford to lose.
It sounds like navigating the world of Bitcoin and cryptocurrencies requires a certain level of tech savviness and risk tolerance.
To some extent, yes. But the good news is that as the industry matures, we're seeing more user-friendly tools and resources emerge. There are now companies that offer custodial services for Bitcoin, similar to traditional banks, which can provide a layer of security and peace of mind for those who are less comfortable managing their own digital assets.
So there are options for people who want to dip their toes into the crypto waters without becoming full-fledged tech experts.
Exactly. The key takeaway here is that the world of Bitcoin and blockchain technology is constantly evolving. What was considered risky or difficult a few years ago is now becoming more accessible and mainstream.
So knowing Bitcoin's journey from an obscure concept to like a global phenomenon, what does this story tell us about the potential and potential pitfalls of future decentralized systems?
It's a story about the power of ideas to disrupt the status quo. It reminds us that innovation often happens at the edges, driven by people who are passionate about challenging traditional ways of doing things.
It highlights the importance of thinking critically about the implications of new technologies.
Absolutely. As we enter this era of decentralized technologies, we need to be mindful of both the opportunities and the risks. It's a time for both excitement and caution, for bold experimentation and thoughtful consideration.
Well said. So as we wrap up our deep dive into the origins of Bitcoin, what's like the one key message you want to leave our listeners with?
Well, the story of Bitcoin is far from over. It's a story that we're all writing together through our choices, our investments, and our engagement with this technology. And while no one can predict the future, one thing is certain. The ideas that Bitcoin represents, the principles of decentralization, transparency, and individual empowerment will continue to shape the world for years to come.
That's a powerful thought to end on. Thanks for taking us on this fascinating journey through the origins of Bitcoin.
It's been my pleasure.
Well, folks, that's a wrap on our deep dive into the origins of Bitcoin. We explored its roots in the cypherpunk movement, its rise through the dark web, the challenges it faced, and the incredible impact it's had on the world of finance and beyond.
It's a story that offers valuable lessons about the power of innovation, the importance of resilience, and the need to engage critically with emerging technologies.
As we move forward into this era of decentralized systems, the story of Bitcoin serves as both inspiration and cautionary tale.
It reminds us that the future is not preordained, but something we create through our collective actions and choices.
So stay curious, stay informed, and keep exploring the fascinating world of Bitcoin and blockchain technology. Until next time, keep learning, keep diving deep.